Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Insert stock name.
We're going to examine its whole transition story, that sudden burst of momentum and what a massive defense program could mean for its future.
Exactly.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us bring you more of these analyses faster.
It does.
Okay, so let's unpack this company. From what I'm seeing, this is a business that's, well, it's right in the middle of a big shift. Where exactly is this transition taking them?
It's a major pivot. I mean, they're really moving toward becoming a key player in next-generation space tech.
So away from their older business.
Completely.
Yeah.
They're focusing on the high-growth stuff.
Yeah.
Specifically, satellite manufacturing and space-based data solutions. That's where the core value is now.
And what are the actual products driving this? The hardware?
The hardware, yes. They're small satellites. They have two main models, the LizzieSat and then the bigger one, the LizzieSat XL. And these aren't just simple relays. They're designed to collect and actually process complex data while they're up there in orbit. They're the vehicles for future revenue.
That sounds incredibly capital intensive, especially for a company in transition. I was looking at the Q3 numbers and they weren't great.
No, they weren't.
Declining revenue, negative EBITDA, negative gross margins. So how do you possibly finance a huge pivot like that when you're consistently in the red?
That's the million-dollar question, isn't it?
Huh.
And it's key to understanding everything that's happened recently. They needed cash.
Right.
So they went out and got it. They did a public offering, raised $16.2 million in first liquidity.
How many shares was that?
It was 10.8 million shares at a price of $1.50 a share.
A capital raise like that,
Yeah.
it usually signals weakness or at least some short-term trouble. Was this just to pay down debt?
Well, what's fascinating here is how they're using it. The balance sheet doesn't show any heavy leverage, so it wasn't for debt. It was specifically earmarked for growth.
For growth.
For acceleration. Expanding sales, marketing, new product development, and this is the critical part, scaling up manufacturing capacity for those LizzieSat platforms.
So they're choosing to burn cash now to land big contracts later. That sounds, accelerating with negative cash flow is incredibly risky.
It is. It's the classic high-growth play. Your free cash flow is negative because every single dollar is being plowed right back into scaling the business.
So what should we be watching to know if they're burning too fast?
You have to watch the leading indicators of revenue. Are they announcing new LizzieSat deployments? Are they getting those task orders we'll talk about?
Got it.
The whole thesis really hinges on these big investments translating into big contracts, and quickly. If we see a lag in new contracts over the next, say, 2 quarters, then that negative cash flow becomes a real problem.
It's a race against time.
It is. They're sacrificing today's profits for a bigger piece of the market tomorrow.
Which makes their competitive moat, their advantage, even more important. In a sector with absolute giants, how does a smaller company like this protect its turf?
Their edge is all about control. They call it the Space Infrastructure as a Service model.
Which is just a fancy term for
vertical integration. Basically, they handle everything, the entire satellite lifecycle, from designing and building the thing to operating the mission and then analyzing the data it sends back.
Okay, walk me through the data part, because that's usually where the really high margins are, right?
Absolutely. The data processing uses their own suite of AI tools. They mention Orlaith AI, FeatherEdge, and Cielo.
And these are built into the satellites.
They're integrated directly. So
Yeah.
clients get this highly processed, actionable intelligence instead of just, raw satellite photos. It's a full end-to-end solution.
Vertical integration sounds great, but it can also be slow and expensive.
Yeah.
How do they keep up in a sector where speed is everything?
The key is where they've put their money. Specifically, their manufacturing facility down on Florida's Space Coast. It's a 35,000 square foot operation.
Okay.
But its real value isn't the size, it's the certifications. It's got the ISO 9001 and AS 9100 certifications, but crucially, it's ITAR registered.
Okay, hang on. For anyone listening who isn't familiar, we hear ITAR thrown around all the time in defense and aerospace. Why is that registration so important?
ITAR stands for International Traffic in Arms Regulations. Being registered means the U.S. government has certified your facility to handle sensitive, controlled defense technology.
So it's a security clearance, basically?
In a way, yes. It's not easy to get. It requires intense security, vetting, compliance. It means you can build and work on classified projects for the Department of Defense.
So if you're the government and you need a satellite solution, you have to go with a certified company.
You have to. That ITAR status creates a deep, deep barrier to entry that competitors can't just jump over.
That makes the fundamentals compelling. But the fundamentals alone haven't driven the price. This is where it gets interesting. The technicals have been explosive. What's behind this?
Explosive is the right word. The stock absolutely rocketed. It's up over 500% in just the last month.
Wow.
And this isn't a slow climb. This is an aggressive, bullish momentum, and it's fueled by very specific news.
Okay, can you break down those spikes for us? What were the immediate drivers?
Sure. So we saw a huge spike of 34% on just one filing, an institutional stake.
Those are big money announcing they're in.
Big money. And that was followed by more upticks, a 14.15% jump, and then another 20.6% jump tied to new contract news and a key board appointment.
Okay.
These are signals that confirm buyers are in control, and the psychology is extremely bullish.
But a surge like that fast, usually pushes a stock deep into overbought territory. That's normally a huge red flag, right? Suggests a pullback is coming.
It did go into overbought territory. But what's been impressive is the resilience. The stock has held these higher levels. It's consolidating up high.
So it's not immediately selling off.
No. And when momentum is this strong, and the stock holds its gains, despite those technical warnings, it suggests the catalysts driving the buying are strong enough to override the usual profit-taking.
Let's talk about the volume. That's always the clearest sign of where the serious money is going.
The volume analysis here is critical. I mean, it is extremely compelling. We've seen a staggering 470% monthly surge in trading volume.
470%.
But the most telling data point goes back to that offering we mentioned. When a company issues new shares, dilution normally tanks the price.
Right. It's sellers thinking, my slice of the pie just got smaller, and they head for the door.
Exactly. But here, the shares jumped 17% after the offering was announced.
It's counterintuitive.
It means the institutional buying was so strong, it just completely steamrolled the market's fear of dilution. The big buyers saw that $16.2 million is strategic. They saw the dilution as a small price to pay for what's coming next.
So the big money is signaling some serious conviction. That brings us to market perception. What's the biggest driver here? What's the story everyone's buying into?
The quantitative mood is moderately bullish, but the sentiment isn't just vague hope. It's tied to one thing, a colossal contract. Their selection for the Missile Defense Agency's SHIELD program.
The SHIELD program, just the name sounds huge. What is it, and what kind of money are we talking about?
SHIELD is central to the U.S.'s next-gen missile defense strategy. Fake space-based sensors, early warning systems. And the opportunity is, well, it's staggering. The company was selected for what's called an IDEQ contract.
An IDEQ.
Indefinite delivery, indefinite quantity. And this one has a colossal $151 billion ceiling.
Wait, $151 billion? But that's not guaranteed revenue for them, right? That term, IDIQ, is important.
No, absolutely not. That's the crucial detail. The $151 billion is the total ceiling for the entire program, shared among all the contractors over a long time.
Oh.
For this company, the IDIQ means they now have a seat at the table. They are eligible to compete for specific, smaller task orders under that giant umbrella.
And with their ITAR status and everything else, they're well positioned to win those.
Perfectly positioned. It gives them a decade-long runway of potential revenue.
That kind of opportunity has to get analysts' attention. What's the consensus view?
The analyst community is unanimous. It's a firm buy rating across the board. And the average price target is ambitious. It's $10.
$10.
Yeah. So that signals they expect a multi-bagger return once those SHIELD task orders really start rolling in.
And the institutional buyers that sparked that 34% rally, who were they?
That was a cluster of buys from CVI Investments and Heights Capital Management. They picked up a combined 7.4% stake and had to disclose it.
They disclosed it with a Schedule 13G filing. What does that signal to a retail investor, in simple terms?
A 13G is basically a public announcement from a big passive investor like a hedge fund saying they bought a major stake over 5%. When smart money files one of those for a 7.4% stake right after a dilutive offering, it's a very loud public signal. It says they believe the future contracts are worth way more than the cost of that capital raise.
And that confidence was probably helped by the addition of Kel Wendeling to the board. She's an aerospace veteran.
She is. And in defense contracting, leadership is everything. Kel Wendeling knows how to navigate these huge, complex government procurement cycles. Her appointment signals they're serious about becoming a prime defense contractor.
And the market is starting to connect the dots. New leadership, big contract vehicle.
Absolutely. The speculation now, the optimism, is that those task order wins under that $151 billion SHIELD program are imminent. The market is pricing in the execution, not just the potential.
Okay, so looking ahead, what should people be watching for over the next, say, 90 days? What are the big catalysts?
The clock is ticking, for sure.
Yeah.
We don't have a firm date for Q4 or Q1 earnings yet, but everyone expects that to be the inflection point where revenue starts to ramp up from Shield prep work.
And beyond earnings, what are the top 3 news items that could move the price?
Number one, the official announcement of the first Shield task orders. Those are the big ones.
Okay.
Number two, any investor updates on LizzieSat deployments. We need to see proof that the new business model is working. And number three, any news out of major defense conferences where their new board expertise could land more deals.
And zooming out, does the macro environment support this? Geopolitics, government spending?
It's a massive tailwind. The whole investment thesis benefits from this broader rotation into space and defense stocks. With global instability, U.S. government spending is going up, and companies with a piece of that $151 billion SHIELD program are set to ride that wave for a decade.
Okay, so that's the bull case, and it's a strong one. But a 500% rally, it never comes without risk. What's the bear case here? What's the biggest threat?
The primary risk is still dilution and profitability. We can't just ignore that the offering did cause an 11.72% drop at first. Bears will point to the negative margins and argue the valuation is way too high for a company that isn't generating cash yet.
But what's the counter-argument to that? How is that risk being mitigated?
It's all about where that $16.2 million is going. The money's being deployed immediately into preparing for those revenue-generating SHIELD task orders. So if they execute and those contracts start hitting the books, the dilution gets forgotten very quickly. The risk shifts from liquidity to pure execution.
What about short sellers? They must have noticed this rally.
Oh, they have. Short interest is up significantly, about 74.5% recently. It's at 5.17 million shares, which is almost 15% of the float.
That's a lot of people betting against it.
It is. It signals a big group of traders are convinced the stock has run too far too fast.
Does that create a risk of a short squeeze?
It's a manageable risk for now. The key metric, the days to cover ratio, is very low. It's 1.09. That means the market could absorb a lot of short covering pretty quickly without a massive squeeze. And, crucially, the institutional buying we talked about is acting as a strong counterweight to the short sellers.
Yeah.
For now, the bulls are winning that fight.
All right, let's pull this all together. Give us the final thesis, the score, and the elevator pitch.
Okay, we're giving this a bullish score of 7 out of 10.
A 7.
A 7. The pitch is this. Insert stock name selection for that huge $151 billion SHIELD program, plus the $16.2 million in growth capital and new board expertise, positions it for a massive acceleration in defense revenue. That potential is already being validated by the 500% plus momentum and confirmed by that 7.4% institutional stake. And the vertical integration with AI satellites and that critical ITAR status gives them a real sustainable moat.
And in terms of timing, is this a quick trade or a long-term hold?
It's really both. There's a short-term swing trade opportunity here. Focus on those imminent SHIELD task orders in the next 1 to 3 months. But there's also a multi-year hold thesis, which depends entirely on them executing on those contracts and ramping up manufacturing. High risk, but very high potential reward. And to leave you with a final thought to chew on, given the sheer scale and, frankly, the geopolitical necessity of that $151 billion SHIELD program, what does the current global defense spending environment suggest about the future for companies like this one? Could we see the entire next-gen space sector pushed far beyond even the most optimistic growth forecasts?
That is the massive question, isn't it? It drives the whole sector. Thank you for walking us through all of that. It was a fantastic analysis.
My pleasure.
And if you found this talk useful, please remember to subscribe, like, and comment underneath. For Smart Wealth with Joshua, I'm Alex. We'll see you next time.